Usually, when you hear about a modern gold rush, everyone focuses on the miners.
Right, the ones digging.
Exactly. Or, well, in today's world, that would be the massive tech companies training these, trillion parameter artificial intelligence models.
That's the big AI players.
But for this deep dive, we are looking at a completely different side of the boom. We're looking at the inspectors who make sure the shovels don't just, snap in half.
I love that analogy. It's so true.
Yeah, and our sources for this exploration today are Teradyne's Q1 2026 earnings presentation and their accompanying press release.
Both really fascinating documents.
They really are. Our mission here is to explore this massive, entirely hidden picks and shovels economy right behind the AI boom.
The infrastructure nobody really sees.
Exactly. We are unpacking how a company that simply tests technology is quietly posting these staggering record profits. And, what their internal financial numbers reveal about the actual physical structural realities of the AI revolution.
It is a really fascinating translation exercise, taking these incredibly dense financial disclosures and mapping them directly onto the physical limits of the future of technology.
Okay, let's unpack this. Because the raw numbers in this Q1 report, they're a flashing neon sign that something just extraordinary is happening in the hardware space.
Oh, absolutely.
I mean, Teradyne's Q1 2026 results completely shattered their high-end guidance. We're looking at a revenue hit of $1.282 billion.
A billion, yeah.
$1.282 billion. That is an 87% year-over-year increase and an 18% quarter-over-quarter increase.
Which is huge for a single quarter.
Right. And the profitability metrics, they show an even steeper climb. Their non-GAAP earnings per share came in at $2.56.
Wow.
Which is, get this, a 241% year-over-year growth.
That's just wild.
And just to frame that for you listening, companies use these non-GAAP numbers to strip out like one-time unusual expenses, right?
Yeah, exactly. It gives investors a look at the true operational heartbeat of the core business.
Right. And that heartbeat is racing right now.
It really is. And the catalyst driving that acceleration is undeniably artificial intelligence.
Just entirely AI.
Pretty much. Approximately 70% of this revenue is driven by AI testing. And what's crazy is, just one quarter ago, in Q4 of 2025, that number was 60%.
Wait, a 10% shift in revenue attribution for a multi-billion-dollar hardware company in a single quarter. That is wild.
It's massive.
It really shows this isn't just a gradual upgrade cycle,
What's fascinating here is the sheer velocity of that phase change. It points to a dramatic pivot driven by a concept called verticalization.
Verticalization, okay.
Yeah, so historically, tech hardware was somewhat modular. You might buy processors from one vendor, memory from another, networking gear from a third, and then you just assemble it.
Like building a custom PC or something.
Exactly like that. But AI requires such intense performance and speed that companies can no longer afford the inefficiency of mixing and matching standard parts.
Right, the bottleneck would be too huge.
Exactly, so they are designing their entire systems vertically, from the custom silicon all the way up to the data center rack.
Man, that makes the stakes infinitely higher. Because if you have a flaw in a, multi-million-dollar custom-built AI server rack, you can't just unplug a faulty component and swap it out like an old hard drive.
No, you really can't.
The entire vertical stack is essentially compromised.
Right, the cost of a failure becomes catastrophic. And that is exactly why testing becomes exponentially more valuable.
That makes sense.
When the technology is this complex and this highly integrated, you basically pay whatever it takes to ensure the silicon is flawless before you even power it on.
So what does this all mean? Like, if 70% of their massive $1.282 billion quarter is AI-driven, we really need to look at Teradyne's specific business segments, right?
Yeah, to see where the money is actually moving.
Exactly. And looking at the breakdown, the vast majority is coming from their semiconductor test segment. That alone brought in $1.111 billion.
Which is huge.
Yeah, it's nearly 87% of their total revenue. Meanwhile, their product test division brought in $80 million, and robotics brought in $91 million.
Right.
But with semiconductor tests making up almost 90% of the pie, don't they look dangerously top-heavy? Like, if the AI chip market hits a snag, Teradyne's revenue model seems incredibly vulnerable.
Yeah, and honestly, any financial analyst would flag that exact concentration risk.
I'm sure they do.
But Teradyne addresses this in their presentation, through their wafer to AI data center strategy.
Okay, what does that look like?
They are attempting to insulate themselves by embedding their testing equipment across multiple sectors. So
Hmm.
they aren't just testing graphics processing units, GPUs.
Right.
They are testing across broader computing, mobile, auto, and even industrial sectors.
Even so, AI compute is clearly the anchor pulling the ship right now, then.
Oh, absolutely. It is
Yeah.
the dominant force. But a massive subdriver within that anchor is the memory market transformation.
The memory market.
Yeah. As AI models evolve, they don't just calculate faster. They need to hold and access vast amounts of data instantly.
Oh, I see. They can't wait to pull information from, like, cold storage.
Exactly. And this is driving a massive surge in the need for high bandwidth DRAM and flash memory for 2026.
Okay.
And Teradyne is testing all of that advanced memory infrastructure right alongside the processors.
And they're doing it with incredible financial efficiency, too. I mean, looking at the numbers, their gross margins are sitting at a very healthy 60.9%.
Which is incredible.
Yeah, for a company building physical heavy machinery.
Yeah.
A 60% margin is phenomenal. Those are numbers you usually only see in software where the product is just, code.
Right, where reproduction costs are basically zero.
Exactly. And on top of that, they've shrunk their operating expenses, their OpEx, down to 23.4% of revenue.
That's a great metric.
Yeah, they are growing their top-line sales massively without having to bloat their internal overhead.
And that kind of operational leverage, achieving software-like margins on physical steel and robotics, that only happens when your customers are entirely dependent on your product.
They really have no other choice.
Right. Teradyne has immense pricing power because the alternative for the customer is an undetected chip failure, which, as we discussed, is catastrophic.
That actually brings us to the physical journey of these chips, which the presentation details extensively, and it highlights exactly why those customers are so dependent on Teradyne.
The whole assembly line.
Yeah, we often think of software as just like invisible math living in the cloud. But scaling an AI data center involves a rigorous, deeply physical, multi-step pipeline.
It's very physical.
Right. It starts as a raw silicon wafer, then it's sliced into a die. That die is attached to a substrate, sealed into a package, mounted on a printed circuit board, placed in a tray, stacked into a server rack, and finally installed in the data center.
And at every single one of those microscopic and macroscopic stages, the cost of a hardware failure compounds.
Right. If you catch a flaw on the raw silicon wafer, you just throw away a tiny square of sand that cost a few pennies.
Sure.
But if a microscopic defect makes it all the way to the printed circuit board stage, you are throwing away thousands of dollars of integrated components.
Yeah.
And if it makes it to the rack stage, you could be risking a catastrophic fire or a system failure in a $100 million data center.
And the key here is that Teradyne is operating at every single one of those escalation points. They utilize robot-assisted test, optical test, and high-speed interconnect test.
The optical test systems really stand out in the sources, actually. Teradyne highlights two new production introductions, systems called the Photon 100 and the Omnix.
Yeah, the photonic side is really interesting.
We are so used to thinking about computing as just running electricity through copper wires. But at the speeds required by modern AI, copper actually becomes a physical bottleneck.
If we connect this to the bigger picture, electrons moving through copper generate friction, which manifests as heat.
Right, and AI chips run extremely hot.
Exactly. And copper wires take up physical space. When an AI chip needs to process gigabytes of data per millisecond, copper wires simply melt or they create too much electromagnetic interference.
So what's the solution?
The industry is rapidly moving toward photonics, using lasers and light to transfer data between chips.
Which requires an entirely different branch of physics to measure and verify. You're no longer just using a multimeter to check electrical resistance. You are testing the purity, alignment, and speed of microscopic light pulses.
Exactly.
And the Photon 100 is specifically designed to test those optical transceivers.
And testing light at that scale introduces intense complexity. And here's the core dynamic that makes this so lucrative for Teradyne. AI advancements lead directly to more test complexity.
Because the connections keep getting smaller.
Yes, you are testing smaller connections at faster speeds using completely new mediums like light, and more complexity naturally dictates longer test times.
Oh, wow. And if a chip takes twice as long to test, the factory's production pipeline basically slows down by half.
Exactly. The only way a manufacturer can maintain their massive production volume when each chip takes longer to test is to buy more testing equipment.
I see.
They have to parallelize the process. It is a compounding loop of revenue for Teradyne.
That's brilliant.
The smarter the AI gets, the harder it is to test. The longer the test takes, the more machines Teradyne sells just to keep the factory moving.
The business model is practically self-perpetuating on the digital side.
Yeah.
But looking at the sources, there is a glaring contrast when we switch over to the physical world.
Yeah, the robotics segment.
Right. We really have a tale of two AIs here. The digital chips versus the physical robots.
The contrast is extremely sharp.
While the digital chip testing segment is exploding, Teradyne's physical AI segment, their robotics division, tells a very complicated story.
It does.
The presentation shows $91 million in revenue for robotics, and it notes that demand is being driven by global skilled labor shortages, the reshoring of manufacturing, and the physical build-out of these massive new data centers.
All of which sounds great on paper.
Right. But then the financial reports detail severe restructuring costs. They executed employee severance impacting approximately 200 employees in Q4 of 2025 and another 150 employees in Q1 of 2025 in that robotics division.
That's a significant workforce reduction.
Yeah. I mean, if automation is the undeniable future of manufacturing, laying off 350 people in the robotics sector seems entirely contradictory.
It highlights the extreme friction of the physical world. We're seeing the reality of corporate realignment as Teradyne learns a very, very expensive lesson.
Riches.
Physical AI is magnitudes harder to scale than digital AI.
Right, because digital AI is virtually frictionless.
Yeah.
You can update a language model and deploy it to 1 billion smartphones globally in a matter of hours.
Exactly. But deploying a robotic arm in a real-world warehouse involves gravity, dust, varying lighting conditions, unmapped obstacles, and just the physical wear and tear of motors and gears.
So many variables.
Right. A robot trained to pick up a perfectly square box might fail completely if the box is slightly crushed or wrapped in reflective plastic.
That makes sense.
And the presentation notes that Teradyne is strategically shifting its robotics focus. They're narrowing in specifically on e-commerce, logistics, semiconductor, and electronics verticals.
And they explicitly state their goal is reducing implementation complexity, which makes perfect sense when you think about it.
Oh.
It's the difference between trying to build a multi-purpose robot butler that can navigate a messy, unpredictable house versus building a robot that just moves identical pallets across a perfectly flat, well-lit warehouse floor.
It is a strategic retreat to structured environments. They realize that trying to build universal automation that works everywhere is simply too capital-intensive and complex right now.
So the layoffs were about focusing the division.
Yes. The layoffs and restructuring are the result of pulling back from those broad, complex deployments to focus purely on the specific industrial niches where automation is straightforward, repeatable, and highly profitable.
Okay, so having clean house in the robotics division to protect those margins and riding the massive wave of optical chip testing, let's look at the future trajectory.
The forward guidance.
Yeah. How does a company sustain this momentum, and what are the storm clouds they are warning investors about? Because their Q2 2026 guidance actually projects a dip.
A slight dip, yeah.
Right, they expect revenue to drop slightly to between 1.15 billion and 1.25 billion, with EPS landing between $1.86 and $2.15.
The presentation attributes that dip to the nature of hardware cycles. They note that 55 to 60% of their first-half revenue linearity is driven by the specific timing of AI programs.
Oh, because hardware is a lumpy business.
Extremely lumpy.
They don't get a steady stream of subscription revenue every month like a software company. They get a massive wave of cash when a tech giant finally pulls the trigger and launches a new chip architecture, and then the things kind of cry up down while the factories actually run.
Exactly. But despite the lumpiness, their overarching long-term target is highly aggressive. They laid out a target model for 2025 and 2026 based on an automated test equipment, total addressable market, a TAM, of $12 to $14 billion.
The total addressable market being the entire global pie of money spent on automated testing. And they are aiming for roughly $6 billion in annual revenue, essentially attempting to capture half of the entire global market, alongside an EPS of $9.50 to $11.
It's a huge target.
It is. And their balance sheet supports that kind of aggression, actually. They generated $200 million in free cash flow this quarter alone.
Just in Q1.
Yeah. And free cash flow is the actual cash left over after paying for operating expenses and maintaining capital assets. It's the money they can use to expand, acquire, or return to shareholders.
And their history of capital allocation shows they strongly prefer the latter.
Yes. The sources show an unbelievable $4.7 billion in stock buybacks since 2015, They are consistently returning massive amounts of that free cash flow to shareholders.
which investors love.
They do. But here's where it gets really interesting. You can have the most advanced photonics testing in the world, the healthiest gross margins, and a mountain of cash. But you are still anchored to the realities of the physical globe.
Geography still matters.
Oh, absolutely. The safe harbor risks listed at the beginning of this presentation are a stark reality check.
The legal disclosures outlining the potential threats to the business, you mean?
Exactly. The sources explicitly list severe macroeconomic vulnerabilities. They specifically name U.S. Department of Commerce export controls regarding China. They name specific foreign customers like Huawei and HiSilicon. They also explicitly mention the impacts of global geopolitical conflicts, citing the Israel-Hamas conflict.
This raises an important question about macroeconomic dependency. Teradyne might control the absolute pinnacle of physics and testing technology, but they do not control international trade laws, and they certainly do not control global supply chains.
Right. I mean, a single memo from the U.S. government deciding that high-speed optical testing equipment cannot be sold to specific foreign markets would shrink their total addressable market overnight.
Instantly.
It wouldn't matter how good the machines are.
That $6 billion target is heavily reliant on global stability. You know, the advanced chips they test are often designed in one country, manufactured in a second, packaged in a third, and then deployed in data centers globally.
It's a massive web.
It is. And a disruption in any one of those geographical nodes, whether by conflict, pandemic, or trade restriction, can bottleneck international hardware sales instantly. Their technological dominance is absolute, but their vulnerability to global politics is severe.
So as we wrap up this deep dive into the hidden economy of AI, I want to bring it all back to your own daily life.
Yeah, what does it mean for the listener?
Exactly. When you ask a generative AI to write an email, or you see headlines about a massive new multi-billion-dollar data center being constructed, remember that absolutely none of it functions unless a company like Teradyne physically verifies billions of microscopic laser-driven connections.
It's amazing to think about.
They aren't writing the code, and they aren't manufacturing the silicon. They are the invisible quality control checkpoint on the highway to the AI future.
Verifying the incredibly fragile physical foundation that the entire digital world rests upon.
Which leaves us with a final thought to ponder. We discussed how AI chips are getting infinitely more complex, utilizing light instead of copper and shrinking closer to the atomic level.
Right.
And we know that as complexity rises, human design tests take longer and become exponentially harder to engineer. Human-built testing equipment will eventually hit a physical and cognitive limit.
So where does that leave us?
That's the question. Are we rapidly approaching a threshold where the only thing smart enough and fast enough to design the microscopic tests for the next generation of artificial intelligence is artificial intelligence itself?
Wow.
When the shovels become too complex for human inspectors to understand, who inspects the inspectors? Think about that next time you rely on an AI for an answer. Thanks for joining us, and we'll see you on the next deep dive.